So for this video, we're going to be going over the 930 and silver bullet model, but I'm on the daily to mark out my higher time frame levels. If I sound different, it's because I think I'm coming down with a sickness, like the flu. I believe I woke up and I felt muggy today. So this level here is liquidity. Long term, we're looking up here. And usually when I have a long-term bias like this, where I just see liquidity, I'll always go to the next piece until I got there. So this would be my objective. Also, this inversion should keep price just hanging on that. I don't need this marked when I'm going down. So let's go to the 1 hour. Looking at the 1 hour, I look for pools. I'm not going to break down the model too much because you guys already know how to trade it. There's a pool here, and we'll drop down to the 15, and you just keep looking for pools. There's a liquidity pool here, but I like this one more. And then we'll drop down to we'll actually play it back. Drop down to the 5. And then we can turn this on. So looking at the start of the open, you have buy side taking control the whole day. So all this is taking control. There's nothing but buyers making money. There's nothing but buyers with the money. So we look for the opposing liquidity, which is sell side. When you're coming up on the open, right, and you have sell side here that you like, but you also have buy side, you kind of got to wait. I did take a long, but that's because I was doing other things. But sell side here, buy side here. And we're going to make this red. In a scenario like this, buy side, sell side, you want to wait for his core content month 1 to happen and then take a trade, which you're going to see. But if you know the draw, then you can go in before that. So like usually before the opens, like 9:30 or 8:30, before those times, if you have liquidity on both sides, just wait. And this is what you're seeing here. Also keep in mind, this is a daily. Liquidity. So long term, we like this for the day. It doesn't have to get there. It does not have to get here. It can get close. So we see sell side. We have a higher time frame liquidity, and we also have this pool. So it makes sense for price to stab up in there and then come down. And I have some evidence for that. All right. Before we go any further in the video, I do want to announce that there is a new server. It's my friend John. He's a good trader. He's really going over the 830 and 930 model and the markups every day. Also, there is 2-hour live streaming sessions every day. So you guys should definitely check this out. The link will be in the description. It's free until the end of the month. So join up if you want. Looking at this, you see the same scenario. I have my daily objective here. Then I marked out this. There's 3 minutes left to that candle, so I'd want price to go up, take this high. It does not have to purge that. It can fail swing, and then come down for sell side, which would be here and here. We're gonna come back to this image, but remember this: a failed swing, run buy side, and then that pool and that pool. And then coming up on your open, order block, power of 3, and this was my long. Was this 5-minute BISI here? This 5-minute BISI, order block, 930 long, into buy side. I didn't need it to get up there. That was my long. We'll drop to 3. drop to the 2. And then price runs. So this is one version of the 930 model, is you can be a buyer or you can wait and be a seller. We'll drop to the 1. So as you can see here, a market structure shift, it failed swing up here, and then a market structure shift happened here with displacement. So now you have a SIBI here. I don't have the seconds chart, so I can't go on the seconds and look for SMT, but if there's SMT here, then that's good. Lower time frames. So price can retrace into there and go lower into sell side. Also keep in mind that you have another pool here for sell side. And one thing you're going to understand too, at least being in my Patreon, is that we like to layer a lot of pools. Like we have a pool here, then we have this low and that low. That's a pool. Also all this with that, and then all this with this, and then that. Like we layer liquidity, and that is like your highest probability, and we wait for certain times of the day for these things to be struck. SIBI breaker, that's 2 PD rays, and then inversion. Right there you can go for a short. You can look for SMT in here on the seconds. I don't have that, or you can wait for change in state. Another break right here in market structure, BISI, SIBI, and a break. So this is mitigation. That's 3 PD rays. Another break in market structure here, but it took liquidity. For me, this would be, I would still go short, but it'd be the least bulk of my position. I'd have most of it up here. And the reason why I didn't short this leg down is because I had this long to the upside. And again, you don't need it to hit your terminus. Just like here, you don't need it to hit your terminus. When you scale in a position, you also want to scale out. So like if you went short on this break here, you want to scale out some here. You don't want to hold down to there. This is best case. And I told you guys, I don't know if it was in a Patreon or this YouTube, but your higher time frames, like your 15, your daily, and your 1 hour, that's, once you mark a piece of liquidity on that, that is your best case scenario. I always say it, but that's your best case. That means if it gets there, you're done. Your objectives are done for the day. You don't even need to keep going. That's it. When you get things like a 1 minute pool and stuff, this is where I partial out. And there it goes. So let's zoom this out. And we're going to put some elements of time on here. So here's the start of the silver bullet. And it's nothing more than this, guys, I'm telling you. $9.30. Silver bullet model. This is classic. And we're going to take a look at my illustration. As you can see here, runs the high, takes my full terminus low, and then pulls back into the range, at least up to this area of consolidation here. And from there, I don't know. And then we can see how that played out. Where's my area of consolidation? I don't remember where it was, but takes sell side and pulls right back up into this breaker. Looking at my model, there's a few things you can do. You can be a buyer on the left side of the curve, or you can be a seller on the right side of the curve. And then this comes down to basic order flow. when you're trying to take the left side of the curve over here, you're going to need to understand how to use time. I would say trading on the left side of the curve, you're going to have to know market inefficiency paradigm, and you're going to have to know what liquidity is first when you're on the left side. So that's something that takes a little bit more skill, because essentially you're trading against the trend. Because we're going up just to go lower. You have to understand we're going up to take liquidity just to go lower for the real draw. So trading on the left side it takes a little bit more skill. Not saying people don't have skill, because we're doing it in our Discord, but on the right side of the curve, when you're trading this, you already have time behind you, which is 9:30. In this case, you have the liquidity gone, and you also have another draw. When you're on the right side, you get to stack reasons to go down here. One being 9:30 went higher, so we're more likely to go lower. There's a pool. We took buy side. We had a market structure break. You get to build a lot more of your case on the right side of the curve. So when it comes to this model, we know how to use time. Some people get killed trading prior to 9:30. Some people get killed trading prior to silver bullet, but there's a time and place for all these models, and I don't trade anything past 10:30. Anything past 10:30 is, I'll leave that for you guys. I don't trade that. 10:15, I just tape read from 15 to 30 just to watch if it hasn't hit my draw, like here. But from 9:30 to 10, this is where most of my trading is. From 9:30 to 9:15, this is where most of my trading is. If there's high impact news driver at 8:30, which this is all my stuff, I will trade from, it depends, you know, sometimes I'll trade from 8:30. I'll just scoot this stuff back. So 8:30 to 9:15, and then tape read the rest. It really depends on the draw, on liquidity. If you want to dive more into that, it will be my link below in the Patreon, but this is how we trade. And this was a little review on the 9:30 and silver bullet model for Friday's trading.